Hey y'all, welcome back to my channel. So SoFi has recently released a new student loan refinance program, and it is called the SmartStart refinance program through SoFi. So SoFi is a banking company that provides a variety of financial services, including banking, loans, financing, refinancing options to people to help them on their financial journey. So that is what SoFi does. And now they have released this new refinance program to help people with their student loans, because the U.S. Department of Education announced that starting in May 5th to be exact, they are beginning to collect on student loans that are in default. So if your student loan has not been paid for more than 270 days, they are coming for you and they will begin actions against you. So SoFi has come up with this repayment program so that members can refinance their student loans and only pay the interest for the first 9 months. So basically how it will work is that if you enroll and you get accepted into the program, because you do have to fill out an application, and they do a soft credit pool at first to check your eligibility. If you are approved, then once you are in the program, you would only pay the amount of interest for your loan amount. So that would depend on how much you owe and student loans and everything, and then the interest rate that you would qualify for. Now, an example that SoFi is giving is that if someone owes about $50,000 in student loans, right, over a 10-year term, their monthly payments with a regular student loans service provider would probably be somewhere between $600 and $700 a month. SoFi is claiming that if you enroll in their program, that same $50 loan enrolled in their program could reduce that payment for the first 9 months. It could reduce it to about $270, $267, $270 for the first 9 months. That's just the interest payment. And then after the 9-month period is up, then you would begin regular payments with your principal and your interest. But it was still claiming that principal and interest payment would still only be around $600, maybe $620. So you would still be saving money versus if you went to, if you kept your loan with the original loan provider. Now, this video isn't sponsored by SoFi or anything like that. I received a notification through my phone because I get a variety of news notifications, different articles and stuff like that. And it popped up and I clicked on it like, what is this? Now, you know these phones be listening, because me and my husband were just a few hours ago or whatever, the day before, we're talking about student loans because he had brought something to my attention about student loans and how they were going into repayment, and they were going to start garnishing people's wages and all this stuff. I explained all of that in my previous video, so make sure that you click that after this one, because I want you to get this information first. But definitely check out that announcement from the Department of Education on the student loans going into repayment. Now, the phones be listening. So it brought up this notification through my phone. I clicked on it. What's this? Opened it, read it like, that's interesting that, you know, they're coming out with this program where for the first 9 months, you only have to pay the interest. But your principal is still going to be there. So, the money is just going towards the interest. It would accumulate daily because that's how these student loans work. It accumulates interest daily. Now, it still may be a good option for you depending on your specific situation. So I'm not saying to hurry up and sign up for this program at all because everybody's situation is different. It would depend on how much you owe, for one, what your current payments are, for two, what your current interest rate is, for three, and how much longer you have to repay on that loan. Because I think for this particular program, it has to be somewhere between 7 and 30 years. Now, after the first 9 months, right, you will start paying the principal and interest for the remainder of the term of the loan. SmartStart SoFi loans come with a fixed interest rate that is competitive and flexible terms of up to 20 years, providing members with control over the amount they pay each month and more predictability over their budgets. Because now you know how much you owe every month, your payments will be the same. The loan flexes with you because you could also pay towards your principal anytime with no penalty. So even though it is allowing you to pay interest only during the first 9 months, you are more than welcome, if you can afford it, to pay more, to put more up to go towards the principal of the balance without there being a penalty. You could also save thousands with a lower rate, and there are no fees required to start. There are no origination fees, application fees, none of that, no fees. You keep your existing grace period, which means that payments only begin when your grace period ends. And for most eligible borrowers, if you qualify, you'll automatically get the option to select partial payments. Now, this program is not an option, unfortunately, for people who are in dental or medical residency refinance loans. However, it is available for all other loan types. And again, it is only available in either 7, 10, 15, or 20-year terms. I want to point out the difference between student loan consolidation and student loan refinancing. So student loan consolidation is when you combine multiple different loans into one single loan, and then you only have one payment for that combination of those loans. They combine them, they average it out, and then they give you a repayment. They give you a repayment amount for all the loans combined. Now, when it comes to student loan refinancing, this is when you get basically a new loan. So the loan that you had before is no longer. You get completely new terms, new interest rate, new amount of payment time. If let's say you want to refinance an original 15-year term loan, you want to refinance and try to get a lower interest rate and get lower payments, they may space that out to a 20-year or a 30-year term loan, lowering your monthly payments. So you get a new interest rate and you get a new term. That is the difference between consolidation and refinancing. Again, it depends on your unique situation, which one would be the best for you. I look at it like this, right? If your sole focus is to lower your monthly payments, then refinance may be the path for you. If you are just looking to make it simple, have one payment instead of multiple different payments, multiple different interest rates, variation and stuff like that. If you would rather have one consolidated loan where you know, okay, this is my monthly payment is going to remain the same for this amount of time, and I don't have to worry about paying this person and this person and this person, and I get to combine all my debts into one monthly payment and it's going to cover everything, then consolidation may be the right path for you. Now, your interest rate includes the interest percentage that you will be charged daily for taking out the loan, and it wouldn't include any other fees, not even a prepayment penalty. I did not notice that there were a lot of companies that charge you a penalty for paying off loans and stuff early, but SoFi is stating that they are not going to charge you a prepayment penalty. And there are plenty of loans that are available that will not charge you a prepayment penalty. And I think that you should definitely look for those types of loans and look at getting the lowest interest rate possible. Most companies decide your interest rate based on your credit report. So your credit report has to be in good standing. Like, you cannot have any other defaults, late payments, collections, liens, any of that, judgments, any of that. Your credit report has to be top tier in order to get the most benefit out of this program. So if you are someone who is struggling with their credit, raising their credit score, getting to that place where you can get better terms, better interest rates, better approval, definitely drop a comment below, drop the comment credit, and I will give you my ebook, which is a step-by-step guide that will help you to repair your credit, what it is that you need to focus on first, and ways in which you can leverage credit to begin to build wealth, pay off debt, whatever your goals are. But it all starts with your personal credit first. Also, I provide one-on-one coaching and walking you through how to repair your credit. I have dispute letter templates, different, resources and information that I myself have done in order to raise my credit score from a 540 or a 550. It was low. It was in the 500s. I had a repossession. I had judgments, medical bills, collections, even in my early 20s, because of bad mistakes, taking out payday loans, which do not do it. I feel like Cat Williams in that movie, just one of them days, that new movie, I'm with Cat Williams on that. Do not get a payday loan. It is a trap. Okay. I was sitting there getting all them payday loans and I got stuck in that cycle because the interest rate is through the roof. It's ridiculous, and they make it extra hard for you to pay it back, because for you to be getting a payday loan, you're already struggling. You already need the money, and then they're adding extra interest and fees on top of that on your next paycheck. But what if you work less hours? Now you're stuck. And so I had that problem, but I was able to do a lot of research, learn things. I created dispute letters, and I was able to get these medical collections removed. The bank was able to come off. The judgment was able to come off. I was able to negotiate terms with them. They wanted like $11,000. I was able to negotiate it to, man, was it 2,000? 1,000? It was ridiculously low. Okay. And got that out of my credit report, deleted. So if you are somebody who is in a situation like that and you're tired of being scammed, because I know there are a lot of credit report people, loan people or whatever, financial gurus out here taking advantage of people, and it's not fair. It's not right. I'm not one of those people who are trying to just, take your money. I really want to help you get to where you want to be and be able to take out $25,000 loans if you are somebody who wants to consolidate your debt, pay out debt, or whatever, start a business, invest, whatever it is that you want to do to get you to the next level. So definitely drop a comment if you are interested in me helping you with that, and I can reach out to you directly. Okay, so I believe that's all I have for this video. Make sure that you check my other video about the student loan repayment. Make sure that you like this video and you subscribe to the channel, and I will talk to you in the next one.